I have learned that if one advances confidently in the direction of his dreams and endeavors to live the life he has imagined, he will meet with a success unexpected in common hours. Henry David Thoreau. My friends, each and every day I want you to progress, advance confidently in the direction of your dreams. And I hope those dreams are for being a great trader, a great investor. And if you do that, each and every day, 10 to 15 minutes, you will get there. It will happen. It has to happen. You will achieve it. And don't worry about how long it takes. Why? Because once you succeed in mastering the charts, you'll make up for all the time you ever spent. Let's jump into these charts. We see that stocks and gold are up. Bitcoin and bonds are down. Let's jump first into the S&P 500. It's up a little bit, just a little bit, 0.39%. We can see where things really hammered down on the S&P on Tuesday, particularly in the morning. And as we look at these are Heikin-Ashi candlesticks. So of course, for those of you not familiar with them, I will help you out. I'll put one of our trainings at the end of today's video on the Heikin-Ashi candlesticks so that you understand them. I've got a great volume training for subscribers. You subscribe for free at chartingwealth.com. I've got a great volume training in the notes today. Please take that. It's not a video. It is something that I wrote, but it is extremely helpful in helping you understand VPA. And you will understand that when you read it's not very long, but it is packed full of information you'll get a lot out of. So check it out. Make sure you subscribe if you're not already. Now, as we look at what happened in the morning, we can see a lot of swinging around in the morning. Volume was high, above average. The afternoon, the same. And we can see that the volatility calmed down in the afternoon, but still volatile, ranging back and forth. So again, where are we? Well, we have gone from green up candles, one during all that time from April the 28th, when the market really started taking off. We had one red doji back on October 13, the week beginning then. We had a second one last week in the first red down candle that we have seen since going all the way back to late April. That is this week. So that is significant, and we are paying close attention to that. We did see a little up movement today. Look at volume. We're only on Wednesday, and we're already at average volume. We look at the Wednesday 2-day candle. It, of course, is a down candle with a lower low than the prior one and above average volume. So again, we've got some weight on the market. We'll continue to see if indeed does this down move fizzle out and start moving up again, or is this the beginning of a long-term downtrend? We shall see. The Qs, that is the NASDAQ 100, that is up 0.60%. And again, the morning and afternoon candlesticks look very similar to the S&P. Volume was less in the afternoon, above average in the morning. We had above average volume on the 2-day with a lower low this week than the prior week. We can see that also on the weekly so far, and it also is at average volume. So lots of volume, and you see red down candles, which is telling you that, again, we are seeing support of that move down. So we'll continue to wait, watch, and see. You know that I'm currently short on the Qs. Now, I will tell you, for those of you who are Patreon subscribers, Patreon members, you can see as we look at the trade execution plan, or the trade execution summary grid, you have numbers that are showing the opposite of what we're seeing, and I present all that to you each and every day. You can see that the S&P and the NASDAQ are still quite long on the directional probability. I'm not saying that's wrong being long, forgive me, but I'm just seeing this rotation over, and I'm seeing that pressure, and it's not being reflected in the numbers. That's the difference between running math and understanding stocks or ETFs that you have tracked for a while. So we'll pay attention to those things. We will juxtapose that to what we're seeing in the market. That's why you can't just be a math whiz to trade. You've got to have the experience. That's why I urge you each and every day, 10 to 15 minutes, to learn the nuances, the personalities of your favorite stocks and ETFs. This comes with practice. If it were simply an engineering problem, all the engineers you know would be what? They would be billionaires, and they're not. So again, practice to show yourself approved. Perfect practice makes perfect. So we look at where we are on 20-year U.S. government bonds. They are down a little bit for the day, 0.20%. You can see where bonds really moved down last Friday, and since then they've just sliding sideways. We do have, again, let's see, we talked about this yesterday, I just don't remember. On Friday, the low on the that was a Monday, Tuesday, 2-day candle, the low was 88.87, and we're at 88.80, so just 7 cents lower. And of course, we do have a red downtrend, so we are down on the S&P and 20-year U.S. government bonds, and we're a little more than a coin toss when we look at the directional probability on a trade execution summary grid. So when we run the numbers, that is agreeing with what we're seeing, unlike the NASDAQ and the S&P. That's what we're seeing on 20-year U.S. government bonds. Now, what about gold? Gold up a little bit for the day, 0.16%. As we look at where gold is, we have a doji for the week. Volume's nothing to write home about. Look at the 2-day. We're nowhere near average. In fact, we haven't hit average volume. We have to go all the way back to last month, the 27th of October on the 2-day chart to find average volume. So gold has lost that volume and momentum. So again, we'll continue to wait, watch, and see. Gold popped up in the morning and then bled off that energy, that price energy in the afternoon. So again, gold, where are we? I can't tell you. The numbers on the trade execution summary grid are up on gold, but I don't feel secure about any place with a doji for the week and low volume as to where gold is going. What about Bitcoin? Well, its energy is down. We've been calling that since we broke that 2-week uptrend, down for that first week beginning 13th of October. Sort of sideways for a couple of weeks, and then the last going into the 3rd week now, just hammering down. And of course, there is an inverse fund, and some of you have been practice trading that. It is BITI. I will show you. I have actually real money traded this in the past. You can see how it has been going up the last 3 weeks. And again, don't forget these inverse funds are set up to go percentage, not dollar for dollar, because they're priced differently. It's priced at what it's priced differently than HOD, although it's sort of close, which is not typical, but it is sort of close right now in price. But don't let that fool you. When you look at something like the S&P 500, that is closed today at 662.63, and you look at SH, which is the inverse, it closed today at 37.43. So again, they're set to do percent by percent, but you can see average volume, lower low. You can see where things cranked down throughout the day in the morning and the afternoon, quite negative on Bitcoin as it pulls back, rolls back, and heads down. That is where we are, my friends, as we end the day on Wednesday, go into Thursday. Hope you're having a great week. We sure appreciate you being with us. Again, great training. We'll put a training at the end of today's video for you, but a great training for subscribers. And again, you can subscribe for free at chartingwealth.com. We don't spam that list. We don't sell that list. That list is for us. And we'll send you just one email a day for every day the market's open. God bless, my friends. All the best from the whole team at Charting Wealth.